Grateful you could stay with us. I am Pius Kujobaka. On to our very first story. There are reports that some of the oil distribution companies are threatening not to review their licenses. This is due to the Gold for Oil program, which they say threatens the operations going forward. Joining us via Zoom on this development is Chief Executive of the Chamber of Bulk Oil Distribution Companies, Dr. Patrick Kweku-Ofori. Dr. Patrick Ofori, grateful you could join us on the marketplace. Now, help me appreciate all of these. Why do you say that you feel the oil for Gold for Oil policy is going to threaten your operations? Help me understand why.
Thank you and good afternoon. I don't think the bulk oil distributors are saying that the current structure will disrupt their operations, or that is why they are threatening to boycott that. That statement, to the best of my knowledge, is not coming from us, and then also not our members. We've created an enabling environment and an engagement program currently going on that our members are making inputs into the structure to ensure that we can help use the existing structure to achieve the market, the key potential risks that we face, which is FX liquidity and its availability and the price and its impact on the pricing. And as we all can see, if this program is to achieve the needed rollout and the buy-in, and all our members are able to roll on to the program, the main fundamental problem that we face, that the BOG step in to do the forest auction, will be addressed, and then also our major risk, which is the FS availability, can easily be dealt with. So currently, I think it's still an ongoing process, and what came in was not the quantity that we all expected, and I think it could not even supply 15 to 20% of the market. And those are the reservations that some of our members have, and the modalities that we are still joining with the key stakeholder leading the transaction to ensure that all other reservations and inputs are taken into consideration to ensure a smooth running of the operation. But from the best of my knowledge, none of our members have threatened not to pay their license fee, since we know for us to even be able to participate and operate, we'll first require to pay your license, and then that gives you the legal mandate for you to conduct business.
So are you satisfied with the structure?
I would say yes, in a certain way, because the existing structure, I think if we are able to achieve how they want to operationalize it, whereby, let's say, all the FS requirement, or all the, let's say, the proceeds from the gold export, a percentage is allocated to the BDCs or to, let's say, importation of refined products into the country. That automatically will help us deal with the challenge that has bedeviled the downstream sector, whereby we hunt and search for forests to pay for the import bills, whilst we also sell our products in cities. So once we are able to do that, I can confidently say that we are in business. That is the main fundamental issue that we want to tackle. But as the structure is, we still engaging to ensure that we can create, if not a perfect model, but one that seeks to accommodate the private sector, and that the private sector requirement for forests and the same FS rate that is guaranteed to BOST is also guaranteed to our members, to ensure that they are able to also participate competitively.
I guess that's the reason why some of your members really don't want to participate in this offer.
It's not that our members are not interested in participating. BOST is not selling to anybody. It's our members who have queued up to buy BOST. But what they want to know is what are the terms and the models. So definitely, if you have 40 KT, some of them already have appetite for more than that. Some of them, the volume that they churn out is more than that. So automatically, not all of them can be rolled onto that program. So that is where a bit of challenge may come in. But there is still a chunk of the market that we can operate in. But the main issue is, can we also be guaranteed the same FS rate, which will make us competitive and which will also help the policy framers to achieve the overall goal of ensuring that prices at the pump are at a reasonable price.
Dr. Forey, help me understand why some of your members are threatening not to review their $300,000 license every year.
There is, I think I have to deny this emphatically. None of our members have said that, not to the best of the chamber, because we collate and represent them. And they've never, we don't have any written confirmation or any even phone call to that effect. They are saying that they are not going to. If you say you are not paying your license fee, then it means you are forfeiting your right to operate your business within this space. So I don't think that statement is factually correct, and it's also coming from our members. But I must say that some, through our engagement, have expressed some form of reservation, and basically on the fact that they wish that a certain level playing field is created so that they can also have equal access to the product on the other hand, and then also the other side of it to also be guaranteed the same FS rate if they are also supposed to land products that are at competitive premium with the one that is being landed through the Go for Oil program.
Before you go, how are the indicators looking from your end in terms of the prices of petroleum products?
Well, we can see that with the Chinese coming out of the COVID and then also preparing for their new year, petroleum prices are likely going to go up on the national market. And like you did even indicate in your currency market, whereby the exchange rate is around 12.5 to certain rate. We are, from our market outlook and what we are getting from the commercial bank, we are getting between that 12.5 to 13.6 on the market. And definitely, if we are to compute the pricing, these are the likely indicators that we'll take into consideration in the pricing build-up in order to arrive at the prices at the pump.
Thank you very much, Dr. Patrick Kweku-Forey. He is the Chief Executive of the Chamber of Bulk Oil Distribution Companies, speaking to us there. You're still watching The Marketplace with me, Pius Kojo-Baka. It's one of our headline stories, and government is said to have achieved its target in the domestic debt exchange program. It is coming after the Finance Ministry secured more than 80% participation by bondholders. Well, this is what Joy Business has picked up with persons about the program. Now, my colleague Joy Biafe has the rest of the story.
Joy Business understands that this might be as a result of what is being described as significant participation by all the major commercial banks, firms in the securities industry, and the insurance companies, as well as institutional investors. We are also gathering that there was some significant individual bondholders that participated in this offer. Just before the domestic exchange program closed last Friday, we had picked up that in terms of monetary value, government had bonds tendered in worth more than 90 billion Ghana cedis. However, we understand that this doesn't include pension funds, or let's say pension funds had been excluded from the offer, and government was still able to hit its target for the program. There were initial concerns that the Finance Ministry will struggle to meet the 80% target when all the bonds that are linked to pension funds are excluded. But what will happen to these pension funds that has been excluded from this domestic debt exchange program? Well, an announcement is expected later today in terms of giving the fine details of this domestic debt exchange program. A breakdown of the various subscriptions from institutional to individual bondholders. We'll also get a fair idea in terms of what is next for government now that it has been able to hit its target under this domestic debt exchange program. Whether Ghana could be on track to secure the IMF program by the end of the first quarter of this year.
Meanwhile, US-based Associate Professor of Finance at Andrews University, Williams Pripra, says government is likely to achieve the target of the debt exchange program. According to him, his analysis of the figures shows that the program has largely been successful. Speaking to Joy Business, Professor Pripra said the majority of the entire debt portfolio of the government comes from institutional investors who signed up for the program.
Pegging the 80%, if you the figures I've seen was basically based on institutional investors. The additional 5%, probably they were thinking that they will get some of the individual investors signing on to the package. If you look at the entire portfolio, more than 82% are in the hands of institutional investors. A little bit is what is in the hands of individual investors. 1.3% is in the hands of pension funds, which were exempted. So my guess is that the 70% is good. I am thinking government will probably report about 75 to 78% of achievement in terms of domestic debt exchange program. And this will be mainly coming from institutional investors.
All right, so we want to stay a while longer on the debt exchange program as government is expected to update the nation on the progress made so far on this. And we've been joined via Zoom by an economist and a senior lecturer at the University of Ghana Business School, Professor Lord Mensa, for his reaction to this. Grateful, Professor Mensa, you could join us on the marketplace. Now, our sources at the Ministry of Finance is telling us we are likely or we are exceeding our target. Your initial thoughts?
Yeah, that would have been a good news for us. I mean, as a country where most of the debt exchange globally have been using not less than 5 months, and all of them achieving their target of 99 to 100%. And if we are using 5, let's say 2.5 months to achieve a target of 80%, it means we've done well. Initially, my thought was maybe we are in a rush because looking at the data from the IMF website, all the debt exchange that we've had globally never, used the compressed time of 3 months or 2 months to achieve, their target. So for me, 80% within 2.5 months looks promising. But then also, we could have hit the 100% target if we are to allow ourselves some time.
Okay.
Because the investor consumption and then digestion of information is quite slow. You don't put things out there for the investor to respond immediately. Sometimes they may have to consult, sometimes they may have to look at the happenings and then the evolutions to see whether they are better off hooking onto the debt exchange or not. But we are lucky, the concentration of our investment community, as far as our government bonds are concerned, is in institutional hands. And so the clustering has helped us in a way. And it has also sped up, the target that government is looking for. So it's a good sign, if I should put it out there.
In the next couple of minutes, if not hours, we should expect government. Tell us how far we've come. Your expectations, how do you think they should go about?
Well, I'm expecting more from the government on the sacrifices the government needs to do to give certain levels of assurance to the public. We shouldn't look at the bondholders alone. It's a state, it's an entire country in general. My worry has always been the the post-debt exchange and the possible fiscal space that we can create, how we take advantage of it, and then utilize it very well to revert the economy back to, its form that will please, the people. So effectively, the government needs to give certain levels of assurance and then come out clearly with the sacrifices that it intends to do when it comes to, the size of government, it comes to the expenditure lines, especially the discretionary ones that they can control to, help us rebuild the economy. So for me, my worry is the post-DDEP, the assurance that will come from the quarters of the government.
All right, so are you confident of a deal with the IMF following the progress made so far, if our projection is anything to go by?
Sure. The debt exchange and the target is not the only indicator that IMF gave to us. We should look at the other parameters, like getting a zero financing from the central bank. If you are doing about 40 billion financing, which is way above the 5% that the ideal 5% that was given, which the laws, the fiscal laws mandate us to operate within. I think we are not being disciplined when it comes to our finances. And for me, looking at the numbers that are coming from the quarters of the Bank of Ghana, indicating the quantums of money that has been printed for the government, it would be difficult to achieve that zero financing, and probably negotiations may stall in that regard, because now that government is struggling to finance, its activities both internationally and domestically. What is going to drag this negotiation is the financing of government activities from the central bank. And I believe that if the government is ready to operate within the 0%, it should be able to speed up the negotiations. But then if you look at the happenings, it didn't take us much longer time before we went back to IMF. When we went to the IMF earlier on, the condition was that government should finance 5% of the expected revenue in a particular fiscal year from the government, and so from the central bank. And so if we are doing way above the 5%, it means we are not keeping to the laws. And I think that is what is going to, punish us, put up, that kind of lengthy, discussions or negotiations on this IMF thing. But apart from that, I think we are on track.
Professor Lord Mensa, we shall come back to you. Immediately, government made that announcement. He is an economist and a senior lecturer at the University of Ghana Business School, helping us appreciate what to expect in the coming hours. Now, government achieved 22.45% oversubscription of Treasury bills sale. That's according to the latest auction of the short-term instruments. However, interest rates remained high, raising concern about the servicing of the debt instruments in 6 months or 1 year to come. There is more in this report.
According to the latest auction results, the government mobilized 3.37 billion cedis with a little over 2.08 billion cedis from the 91-day T-bill. Also, 876.6 million Ghana cedis was secured from the 364-day bill. The data shows that investors are taking advantage of the high yield, which will hurt government in the future. Government is offering the rate because presently the treasury market is its only source of borrowing, hence the need to entice the market participants. The interest rate are still hovering around 35%. Many will be worried about this interest cost because in 6 months or 1 year from now, the government will still be servicing domestic debt at higher interest rates. This could erode the intended gains from the domestic debt restructuring, which ended last Friday, February 10.
All right, so let's make sense out of this oversubscription. Joining us via Zoom is Edem Agama, Head of Trading at Republic Securities. For more, grateful, Edem, you could join us on the marketplace. Now, what is the update on the money market comparatively?
All right, so good afternoon. We are seeing that the rates in the 91-day and the 364-day fell sharply. Although there is a lot of confidence now in the Treasury bill, and investors are beginning to trust that it's good government was able to achieve this target. It's a good sign, and it's very good for this money market, because going forward we'll be able to see how these instruments will trade with regards to the new bonds and the old bonds concurrently.
Quick update on the capital market, and which company do you foresee gaining this week?
All right, so we can also see that there is a lot of pressure coming in for Bob, MTN, and Total. These stocks have been seeing a lot of bids. We expect Total to see some hikes in prices. However, we expect Goil, Unilever, Carl, and GCB to continue the downward trend as investors are losing confidence, and there is mounting offers on the market for these stocks.
Patrick Edemagama, we are grateful for your time here on the Marketplace. He is the head of trading at Republic Securities. A reminder, you're still watching the Marketplace with me, Pius Kojo Baka. Now, as part of efforts to empower the youth and reduce the unemployment rate in the country, indigenous real estate company Sukasa Properties Ghana has organized a seminar to train graduates to develop skills which will enable them to harness opportunities in the real estate space. Now, speaking to Joy Business, Chief Executive of Staff of the company, Isaac Preako-Boateng, charged the youth to be innovative and use technological tools to create opportunities for themselves. There is more in the following reports.
Indigenous real estate company Sukasa Properties has organized a real estate conference aimed at introducing the youth to opportunities available in the real estate value chain. The seminar, which saw various speakers take the stage to educate the participants, also offered nuggets on self-development. Speaking to Joy Business, Chief of Staff of Sukasa Properties, Isaac Preako-Boateng, urged the youth to leverage the ever-evolving technological space to enhance their development.
When you open your doors to the youth, we know a lot is changing. Gone are the days where I'll say to you, social media wasn't something that was of value. But today, all forms of communication, all forms of sales, everything. In fact, if you have something that you want to communicate, social media is one of the biggest platforms, aside the traditional way of doing it. And these young individuals, they have that power at hand. Because we are all young people and we understand the power that exists in this demography, it is only good that we reach out to people of our kind and be able to teach and help them harness the power that they have at hand to create something meaningful.
On his part, the Executive Director of the Ghana Real Estate Development Association, Samuela Megaibo, advised young entrepreneurs not to be in a hurry to compete, but rather take their time to understudy already established companies. This, he believes, will enhance growth and develop local content in the industry.
You want to go and register a construction company, and when you see a job being advertised, then go and bid the same job with Micheletti. Who are you to go and bid job with Micheletti? You should rather find out what Micheletti is doing, the thing that Micheletti will put together to build that house, and find out what you can do out of it, and then take advantage of it and do it to support Micheletti to achieve. Then whilst you are doing that, you'll be growing. And then you can get to that level where they are. But it looks like our youth are not patient, they are not ready to learn, and they always see the end, but they are not prepared to walk through how they got to the end.
With an unemployment rate in Ghana hovering over 14% and a housing deficit of almost 2 million, Sukasa Properties believe that such engagement will help reduce the unemployment rate and also bridge the housing deficit gap.
And that's all in this package by way of Marketplace here on the Joy News channel. I am Pius Kojo Baka. For more news, you can get business stories when you log on to myjoyonline.com/business. Always a pleasure serving you. We leave you with Money Tip on Money Lab.
Hello, welcome to Money Lab. My name is Jifa Fiati. In today's episode, we are continuing the principles of insurance and we'll be looking at two key principles. The first one is utmost good faith. This simply means that both parties to the insurance contract must be truthful. The insured must declare everything that you are insuring, every information that is relevant. Make sure you provide that to your insurer, and the insurer also has a responsibility to spell out all the terms of the policy so you understand what insurance you are having. Again, another principle is loss minimization. It says that make sure you act as though you don't have insurance and take all the precautions that are needed to forestall a loss event occurring or when it is occurring. For example, if you have a fire in your building, make sure you take steps to minimize the impact of the fire. Don't say because you have insurance, let the facility burn. Thank you for joining me on today's episode. See you next time. Bye-bye.